Big tech under fire. A state's attorney general warned that the industry is about to face a reckoning as they believe the companies have become too powerful. A regulatory storm has been brewing around big tech and seemingly picking up steam. Facebook, a prime example, with a New York Times report revealing federal prosecutors are investigating the social media company's data deals. But there could be one name to set to weather the storm: Netflix, streaming higher today as BMO put the stock as its top tech pick, believing Netflix is the most insulated from plans like Senator Elizabeth Warren's to break up big tech. So with regulators looking to crack down on the tech giants, has Netflix really become the safe tech bet, Grasso?
I don't know if it's a safe tech bet. You know, I've been a bull on Netflix, and you know my feel. Obviously, these names, if the market rolls over, these names are going to roll over pretty hard as well. But I was astounded. I watch a lot of Netflix and I watch a lot of Amazon Prime, and I only look for originals. But I was very shocked to see the small amount of originals that are really taking up the viewing time. So that's what made me a little less bullish about Netflix. But if you're comparing to Amazon and you're talking about getting broken up, it's a safer play.
I mean, we're talking about this regulatory cloud, right? And the tragic shooting in New Zealand with the role of social media supposedly in this attack, in terms of the alleged shooter announcing the plan to do the shooting over Twitter and using all these different social live streaming
Facebook
it.
Live.
That really brings up a whole other thorny a bunch of issues.
Yeah, through the lens that you're looking at, absolutely Netflix is probably the most insulated. But to Steve's point, you know, your levels now that we sort of topped out in October, this 365 level, so it would stand to reason we're getting a little long in the tooth. Now, I've done a decent job with Netflix, but for the last $30 or so, I've been wrong. So just that caveat. With that said, I do think Facebook has all kinds of existential risk here. We've had a huge move to the upside off of that last earnings release. But with the headlines now, it's seemingly every headline comes out as negative. And I think if the market were to roll over, Facebook goes down hard.
No, tech has entered the notorious BIG club. And those three letters are the most dangerous letters.
B-I-G.
B-I-G, big. When the government puts big in front of your sector, you've got a bullseye. It's big tobacco, big pharma, big banks, big tech. That tells you've got a bullseye. And I think, look, people are okay from a data perspective giving specific pieces of data to specific companies for a specific value. I don't mind if Netflix knows what I'm watching in order to give me something good. But when you start taking my data that I don't know you're taking, using it for something I haven't agreed to, or you sell it to somebody else, that's a different story. So I think when you look at the business models here, companies that guard your privacy and or use it internally are better positioned than those companies that are using it externally. I think the only issue with Netflix is, let's not forget that Disney's ready to knock on their door.
Right.
So what's interesting is what happened with Facebook yesterday. They had a product left, and I know you guys surrounded the trade last night. But to me, what was different about it is they're now going for a privacy platform. They're going for a privacy messaging platform. They might have a Facebook coin. They are actually taking the bull by the horns and saying, we are going to change our ways. So I don't think Wall Street has priced that in. And to me, that's why Facebook is actually the most interesting.
I was talking to Ed Lee at the New York Times, a CNBC contributor, earlier about that story about the state's attorneys general going after. And I said, you know what? I thought the whole thing was that regulators couldn't really force them to break up because there are no legal grounds to force them to break up. So how can states attorney generals do that as well? And he said, well, maybe the whole angle is that this forces this forces them into a place where they say, you know what, let's do federal regulation, because state by state regulation would be a nightmare for big companies in technology in particular.
Oh, for a company, like, think about for a Facebook.
So could this be the foregone conclusion that there will be federal regulation?
Regulation is coming down. Yeah, probably yes is the short answer to that. But would you want Facebook gets broken up? You want 50 Facebooks? You want each state to have their own? I mean, it's madness if you think about it. And what works for Facebook is the fact that basically advertisers have no place else to go. It's not that they don't want to go anyplace else. They have no place else to go. But if some of these platforms can get their act together, Twitter, for example, then maybe Facebook is not as seamless and as protected as we want to think.
I think the issue is, how do you break them up even if you want to, and what grounds do you use? It's so tough to untangle.